Good afternoon, ladies and gentlemen. Welcome aboard our final full throttle live trading session. Man, hell of a week. Our weekly options live trade brief. Before we jump into it, it's on the screen there, folks. That number might actually be wrong because, like I said during my sound check a little while ago, I know Annie's been on the phone with a couple of folks. So we're in single digits, and when we hit zero, we're done. So head to go.topgunoptions.com/get/FT, and you can grab your slot, okay? Or you can give Annie a call. I don't know why. Well, I do know why you'd want to talk to her, but if the phone lines are tied up, folks, and you don't get your slot, you'll be SOL, which is something out of luck. I was told I need to curb my salty language. All right, so welcome aboard. This is our weekly options live trade brief. Just to give you a heads up, we usually do this Mondays. We do the weekly options live trade briefs on Mondays at 1 o'clock. I didn't do it this Monday at 1 o'clock because I was hosting a timing research trader roundtable with 5 traders total, and I was the host. And for those of you who saw that or attended that, because I know about 600 of you came over from that, or we brought those leads over, 4 of the traders said the market crashes and implodes this week. 1 says it has a rip your face off rally, and that was yours truly. How confident was I? Well, I put on an SPX bull put spread that my members, most of them made $1,600 or max profit in a day. So very happy with that. Folks, here was the flight schedule, man. I'll just get to it. This is it. Look at what we've done, man. This was all free. We opened the doors to our squadron. It was all free. Did a hell of a lot of work this week. Right now, Doug and I are going to knock out a quick debrief. I know a couple of people had a question about his Google trade. So start getting your questions in there right now for Doug. Doug will hang out for maybe about 20 minutes. Any questions about the vertical spread training he did, any questions about any of his trades he did, he'll jump on here in a couple seconds, okay? And like I said, by the time we're done this, we're most likely going to be done with our slots. And Monday, we're going to be getting airborne without you if you didn't get your slot there. Okay, so slot update. You're running out of time, so act now. That's about it. If we don't fill all 9, and I got Annie on my Skype, I might make a little special announcement at the end if there's a handful of slots remaining. So make sure you stay to the end for the special announcement. Doug will knock out a quick debrief. I'll debrief what I did this week. I'll review the weekly options trades, and then take a look at a potential new weekly options trade on the S&P 500 for next week. And you're going to be very surprised at what it is. So, and then, well, we'll take Q&A throughout. But at the end, I'll hang out since I'm going to clear Doug off, since I know he's got a lot of portfolio management stuff he's doing today, also for some of his private clients and some Wingman Group coaching stuff he's doing. So we'll cut Doug off early here. Like I said, folks, this is a mission accomplished. Well, unless I hit my head right now and don't finish the brief. We've essentially knocked everything out that we promised we'd do. We start on time. We went a little long a couple times this week, but why? Because we were honored to have you. I showed you real quick, I think one more partner emailed for us. Did we break 4,000 yet? So like I've been telling you all week, men lie, numbers don't. 3895, nearly 4,000 traders and investors of all skill types, and this is growing. Doug can tell you, we've been on a steady ascent climb schedule, and 2017, hey, 3905, and 2017 is going to be an incredible year for us here at TGO. So, okay. You guys know me by now. If you don't, this might be your first webinar. I'm not going to do this full-blown intro. I need you to watch the replays. So since I know one of my strategic partners emailed last night, and some of you are just rolling in like, who the hell is this guy? You got to go to the replay page. And it's real hard to remember. Go.topgunoptions.com/FT, full throttle, -replay. You can watch Doug's live trading sessions, his training session. If you don't know who the hell I am, you got to watch the Monday night session. The history of Top Gun Options, who I am, our portfolios, our trading methodology, everything. That's the Monday night. And the newest webinars are on the top, and then the Monday night one is on the bottom there. Okay, so there, excuse me, is the replay page. Lighting, looks like you have your lipstick on. Is that a cockpit accessory? Really? That's weird. I don't wear lipstick. Although this right here, no, Annie's Brazilian, but she did not, you know, big ice maker in the fridge. old ice in there, so I'm trying to get the damn thing off. I literally hit my face, hit my lip 2 nights ago with the damn ice maker. So that's maybe what you're looking at, and it really hurt. So that's me, guys. You know what I did up in Chicago, and then Doug and I decided Chicago weather is best left for people other than us, and we headed down here to South Florida. And Doug even was trading out in the island for a while. Man, he was wearing flip-flops and swinging around like about $500 million a day in trades. Showed you the performance of our portfolios throughout the week. Don't need to cover that again. You can watch the replays if you have any questions. And you guys met Doug Wednesday night. Great session. Great session. A lot of great comments to Doug. Doug would have stayed in there until now had I not jumped in there and said, all right, man, let's call it a night. So that's what you're going to get with the full throttle training that Doug gives you. Okay, he's a good man. So, all right, real quick, I don't need to review this. You guys know our methodology by now. You know that you're not going to be an average retail trader anymore because we're going to give you the SOT, strategic, operational, and then we're going to get tactical. I'll do a little bit of an operational and tactical brief because we're doing weekly options, and then we'll take a look at a weekly options trade. So hopefully by this time in the week, you're sitting there going, you know what, Wiz, trading is a form of combat. Somebody's going to win, somebody's going to lose. And with Wiz and Doug, I'm pretty sure we're going to be on the right side of that trade. We also reviewed our acronym, or I introduced this acronym to all of you, to fear 2017. We don't fear 2017, but this nice little acronym is a good place to be looking at trades or things that are going to be driving the market. T, Trump, tweets, terrorism. O, oil. F, the Fed. E, earnings, and also Europe. Are we going to have a Brexit? Are we going to have somebody else? A, Asia, and R, Russia. Since the Mexico guy canceled on Trump, he's going to be calling Putin on Saturday. So you might not like, I don't like, remember folks, I wear 2 suits at Top Gun Options. My Gordon Gekko $6,000 Armani, which is made up, I don't have one, and a flight suit. Wearing my flight suit, I think the Russia trade's disgusting. It's anti-American, quack, quack, quack. Okay, well, whatever, Wiz. As a portfolio manager and Gordon Gekko, I want to print money in that RSX trade, and who cares about what it is and it does to this country. So you got to kind of walk a fine line there. I showed you this earlier in the week. The Goldman Sachs trades, our JP Morgan trades, and a lot of my portfolios are crushing it. Mike's up over he's probably up about $115,000. He traded 20 contracts. I did 5. Diane, Chuck, all our folks are doing great. And these are literal screenshots. You see the names. I'm supposed to have their hometowns on there, so I'll add that at the end just for compliance reasons because I like to. So Annie, if you are off the phone and listening, we need to add hometowns going forward. That's at first name, last initial hometown is like the FTC rule. And here's the trade plan. Did everybody get a copy of the trade plan? I think it's still in here under the handouts. If you guys go down to, is it still there? Yeah, it's down in the handouts section. If you didn't get the trade plan, click on handouts, print that out. It's a nice piece of gear for you to use as we go forward. All right. Man, that was 9 minutes. That's perfect. I didn't want to go any longer than that. So Doug, hey, are you up, my friend?
I am here.
All right, so folks, I'll sit back a little bit. I'll debrief my stuff after Doug does his. So Doug, there might even, I didn't see any of this stuff you're probably looking at as I was squawking. So let me throw you the ball, my friend. And guys, clock's running. It's 1:08. Doug's out of here by 1:30. Over to my friend Doug.
He's putting time limits on me again.
Damn Skippy.
Let's see here. Okay, big thing right up front. Google did not work quite the way we were hoping. So let's run through that right away. Now, before I dive into this, want to have a little reality check with everybody. Not every trade works, and as a matter of fact, there's a good chance that a number of trades will fail. In fact, we plan around that. When a trade fails, it's not something we want to look away from and just ignore. We want to actually figure out what happened, what caused the trade to not work quite right, and also whether or not it worked within the range of possibilities that we wanted. So let's dive into this, and I want to show you exactly why this trade did something strange and why it kind of didn't win. And I also want to relate this back. Somebody also asked, VIX, let's see, empty field, yes, you. It's nice to have your name there so that I can say hello, but How low historically have you seen the VIX? Right now, the VIX is at an absolute crazy low. Now, it's not the lowest it's ever been. Let's not say that. But for a long time, I don't think it's been much lower than this. I think at one point it peaked down into the 9 range for just a very brief moment in time. But the volatility index, the VIX, is down at 10.37 right now. Now, we talked about this briefly the other day. There is a point in time where reality reacquaints itself with the market, or the market reacquaints itself with the reality, because I don't know about you, but I am not feeling like this is the most calm and confident and comfortable moment that I have ever sat in the markets. And that's what a VIX of 10% implies. I mean, literally, that this is the most calm, predictable, easy to understand moment we have ever had in the markets. That's what that low VIX implies. No fear, no uncertainty, no doubt. So that seems a little odd to me, but it is what it is. We work with it. Now, getting back over to the Google trade, let's dive into that one. By the way, for anybody who is looking to get some extra information, a little while ago I published, I sent out some text alerts this morning giving a little heads up on what's going on, and I also published a video update that ran through pretty much what I'm about to talk about. So if you want to get that, let me see here, where is that? That is right in the site, and I believe everybody should have a link because I emailed it to everybody. So that gives you a little 3-minute video breaking down what is going on within the Google trade as we speak.
Well, it's cool.
Quicker and easier typing.
Read what Drazen just wrote there, Doug.
What's that?
Hi, I'm not sure why did you say that Goog trade didn't work out? I'm up $1,800 and Goog trades around 825, which is close to the short Jan strike. So Drazen made nearly $2,000 somehow, Doug. So good on him.
Well, you traded Goog and I traded Goog L. So I probably should have been specific on that. So if you put the trade on Goog and use the strikes that we did, you would have been walking away with an excellent profit right now. But I laid the trade out based on Goog L, and I am down right now. And let's walk through this. So let's actually look at it. And by the way, I am psyched that you made money. I am. I love it when people make money. I do not have to be the huge winner every time. But let's walk through this. All right. Yes. Well, actually, Drazen, that may not be, let me watch what I'm about to do and watch what I'm going to go over, and then make your decisions on the trade. So everybody can see my screen right now. I was in Goog L. Sorry I didn't put the L on the end of it. I probably was being a little vague there. What happened to the earnings announcement? Well, earnings announcement happened. It was boring. It basically just hit exactly where everybody expected. There was no surprises, nothing terribly big up and down. Now remember, it doesn't matter what the earnings number expectation is. It doesn't matter what the whether it was a good earnings announcement or a bad earnings announcement. What matters is what did the market expect out of Google. And by the way, none of those things are necessarily what the market expects. What the market expects is that they're going to get a certain piece of information, and well before the earnings announcement ever happens, they bake that information into the price. Just by trading, if they think that Google is going to do amazing, they buy it and it goes up. If some people think it's going to do horrible, they sell it and it goes down. The competition of that basically translates into the opinion of the broad market of what is going to happen on that earnings announcement, which honestly is different from the analyst estimates, is different from everything else. There's the consensus thought about what will happen. Well, somehow Google in their earnings announcement landed dead on top of the consensus thought. And Google didn't move. I mean, it gapped a little bit, ran around, and then settled right back into pretty much where it was. So we closed here, 855.39. Google had their earnings last night, dipped way down. I was getting really, really excited about this. And then it just suddenly climbed back up, waffled around a little bit, and then boom. Here we are at 849.73. Now, what does that do to the trade for us? Well, it puts us right in the middle of the trade. And here's the other piece, and this is the part that I was surprised about. We went back in history and I analyzed the previous earnings announcements, and we checked out a bunch of them and took a look at a bunch of different things and came out with an estimate that we should be landing at about 17.5% implied volatility today. Normally that works out great. Not always though. Because this earnings announcement was so boring, and somehow this market is sitting in this situation where IV is amazingly low, I mean like kind of scary low, IV on the trade actually dropped down lower than I thought. In fact, I calculated it a few minutes ago. On average, it was 15.5. So that extra drop in implied volatility shifted our entire trade down, and I'm sitting in the middle of this thing taking a small loss. Now, this is a small loss. This is not anything that I'm even, didn't even get my blood pressure up at all about this, and I do like winning. We experience small losses. That's what I want to do. I want to, concentrate us on small losses instead of, huge losses. That's the pain that we get exposed to while we're going for profits. We get paid for taking risks. Well, everything opened up, and here I am, and I should have done it on Goog. By the way, the reason that worked out is because the prices are slightly shifted. If you had have centered it on Goog, like we did on Google, it probably would have been in the same trade right now. So I am happy you made some money on that one. Now, I'm evaluating this right now. I am not out of this trade, and let me explain why. You see this purple line? This is my intermediate P&L. This intermediate P&L is basically where the P&L is right now. The blue line is where the P&L will be at the expiration of the options at the end of today, 4 o'clock. I have to close this trade entirely before 4 o'clock. I'm going to be locking down whatever my profit is one way or another. Profit, loss, either way. But if you look at this, I've got a little tiny bit of room where I could lose a little bit more, and if I get a bit of movement in, decent movement in either direction, or implied volatility moves up a little bit, it dramatically improves my position. So if I'm looking at that, I'm willing to take a small risk for a couple of hours to expose myself to the possibility that I might make a little bit better position. I know I am taking a bit of a risk, another $200 or so. It's not that big a deal. And once again, this is focused on a $100,000 account. $200 is 0.2%. So if I'm willing to do this to potentially come out $400, $500, $600 ahead, maybe more, let's not get too optimistic, it's a good risk reward for me at this moment. This was a bit of a weird situation. It was mainly driven because we had the implied volatility to go down so much. If the IV was higher, then the difference between these two profits would have been greater. I would have had a bigger incentive to get out in the morning. But just trying to maximize the situation, sent out some updates, let everybody know what's going on. There's a video update that you can watch. Walks through all the details of what I'm talking about. My plan right now is basically watch this thing between now and about 3:30. If it doesn't get any better, take my loss, move on. It's a learning situation. What am I taking away from this? This earnings season, I am being extra conservative about the implied volatilities. I actually saw this on another trade. So this is kind of reinforcing the fact that this earnings season, the IV drops are going to be bigger. Going forward, we use more conservative estimates. We use lower IV targets. We adjust what we're doing, and we pick out the trades that are good for those situations. If they're not good enough, we don't take them. That's it. All right, what do we have for questions? Howard, we have replays on everything, absolutely everything. So I think Wiz will be able to get you those links.
Yeah, folks, the link is in your chat there. It's go.topgunoptions.com/FT full throttle -replay.
And Harry, I am glad. Sold your position 10 minutes after it was up, 1980. Good job, Harry. Excellent. By the way, Harry's one of the people who's with us in my ALTB, and one of the things I always push is, you need to be thinking on your feet. You need to make your own decisions. This is not about blindly following everything I tell you. I want to teach you how to think and how to make the decisions. Harry made a good call. He walked away with a nice profit this morning. If I had have been a little bit more aggressive about getting out this morning, I might have had the same profit he did. But you win. You are the you get the star today. Kai, you're inclined to roll your 2 short positions on Google to the next Friday. Okay, here is what I would strongly recommend. I would not do that. Here's the thing. After an earnings announcement, there's generally a tendency in the next several days for implied volatility to drop more. You are going to be in, I mean, if you rolled your shorts, you would probably offset the theta erosion aspect of it, but the implied volatility drop of even a little bit more could really kill that trade. Those trades are very, very sensitive to IV drops. Right now, honestly, we had our opportunity. We took it. A little bit off. We missed. I would move on and look for something else. And that's my 2 cents. We don't have to win against Google. We have to win for our portfolio. Let's find the best possible place we can put our money to make more money. It's weird. Trader psychology, whenever, I'm competitive. I like winning. I do really like winning. I get pissed off when I lose. I have to stop myself from trying to go right back into the same trade because I want to beat that symbol. The symbol does not care about me at all. Doesn't even know I exist. Trying to beat it is really just me using bad emotions. I think that you can take the same amount of money, put it someplace else, and probably have a better probability of success. And that's the thing I think that you should look at. I want you making money, not fixing something. Would a triple calendar have worked? If we could have overcome the additional expense of basically 4 more transactions, potentially could have. We might have had a triple calendar. What Jim's saying, by the way, Jim's one of the members of my Wingman Group coaching. So how's it going? If we put a 3rd calendar in the middle of this, it would have reduced the risk of having this drop in the middle. The trade-off is that it would have. Sorry, I guess the lawn crew decided to work right outside my window right now. God. It would have also reduced the overall profitability of the trade, the max win profit, and it would have cost us a little bit more. So there's a trade-off. We might have made that work out well. Couldn't promise. But yeah, in this case, it probably would have been a bit of a better trade. Most cases, I don't find that to be the case, but each situation is different. So there we go. Let's see, what else? John, I think so. Somebody is building the wall. If it's the lawn crew, then most likely they're going to get deported shortly, and won't have this problem. They'll have a terrible lawn.
Doug's making America great again.
Yes. So, what else do we have out here for questions? Anybody else have any questions on the Google trade, what's going on, what the plan is?
Hey, Doug, somebody up top had a question on vol, with the VIX around, God forbid, a 10 print or 11 print. What's your take on vol here?
What's my take on vol across the board?
Yeah.
Outrageously low.
Yeah, 50,000-foot view.
Yeah, it's crazy. I mean, theoretically, okay, here's a couple of things that this implies. Okay, hold on one second here. I apologize. Give me 20 seconds. I'm going to be right back.
Hey, folks. Tom, I think, from San Diego just grabbed slot number 7. So we have, if you were waiting for me to do my weekly options brief, I'm going to do it after Doug goes and throttles his long crew there. But we're most likely going to be full here in a little bit. So go to /join FT, or we're going to be full here. All right, Doug, go ahead.
Okay, so here's what volatility or VIX being down at 10 means. Okay, a couple of fundamental things that have to happen for volatility. options sellers, options market makers have to sell options at a price where they believe that they're going to come out with an advantage. Now, there is a point where if there's nobody buying, then they've dropped their price enough that they're not going to drop it anymore. But if the buyers aren't coming into the market, then the bid side of the market's not filling in either. What ends up happening is the bid side drops out, and you have a bid-ask spread that gets very, very wide. It becomes very difficult to trade because you're not getting the transactions. Just something important to understand, that we can have the VIX dropping without transactions in the options market happening, because that bid-ask spread can widen out on the bottom. The midpoint is what they calculate the volatilities from, and that shows everything's dropping. So what's very likely happening at this point is we're probably getting overall a significant drop in options transactions in the market, which is going to make things a little bit more challenging getting in and out. We want to focus on higher volume options. It means that a lot of people like hedge funds, large investment firms, things like that, are not investing in hedges. Okay, now this adds up to some very, very scary things. Hedges allow them to manage their portfolios in a more conservative, kind of more slow way. They don't need to panic and react as quickly. If you get volatility down as low as it is right now, that generally implies that the market is not hedging. It is not, it's not buying the options it should be buying to lay off its risk. Doesn't mean the risks aren't there. And this is the scary part. So if suddenly out of the blue we have something trigger the market dropping, SPY goes down 1.5%. Since they don't have hedges on, it means that they have to react faster and more aggressively to basically control the risks in their portfolios, which then causes typically them to dump a bunch of stocks and can cause more of a cascade failure in the market, and we could be sitting here looking at a fairly large correction. I'm not saying that's happening. I'm just telling you what is a potential outcome of having a VIX this low. It is not natural. It is not right. It's against the laws of nature. Volatility is this big elastic band around a midpoint. We don't really know exactly where the midpoint is, but as it draws lower and lower, it stretches out, gets tighter and tighter. It's harder to pull it down further. Volatility in VIX is not a stock. It cannot go to zero. If VIX goes to zero, it means that the stock market no longer exists. So as we pull down lower and lower and lower, that gets tighter, it gets harder to pull it much lower. Could it go down more? Yes. Is it likely to? No. It's probably going to start stabilizing a bit, and then something out there is going to make everyone panic or get nervous, and they're going to start to jump into buying hedges again, and it's going to drive those implied volatilities up. Some stocks are going to go way up, some stocks not much. But as they do that, there's a good opportunity there. There's a ton of opportunity for long volatility trades. Calendar trades, directional calendar trades, diagonals, great opportunities right now. Vertical spreads, bull puts, bear calls, iron condors, not good opportunities right now. Focus your trades on where you've got the greatest opportunity of winning, or the greatest probability of winning. You still need to set up a good trade, and you need to know what the situation is and get yourself aligned to the situation. But right now, the majority of all of the trades I'm working on and looking at are long volatility. Now, they might be bullish, they might be bearish, but they're almost all long volatility trades. That's where the opportunity lies. Hard part, timing all this. When is this going to happen? I don't know. I'm gonna put my cowbell up. I'm going to jump around on stage a little bit, and I'm going to give you an absolute confident estimate of exactly when it's going to happen, and it's going to mean nothing. But right now, the probabilities say that we have a much higher chance of IV jumping up than it going down much further. Do not read that that is a guarantee it's going up. Okay. So that's what I see. That's and you know, all of this to me feels very odd. I like to work on numbers, but the reality is I've also got to get a gut feel of what's going on out there. This is weird. This is something that should happen. The volatility should be this low when everybody is perfectly calm and comfortable and have no worries in the world, and everything is going along nice and stable. The valuation of companies are strong. We are not strong. They're a nice fair valuation. We're running at average P's of 12 to 14. We've got good stable trading. The bond market is stable. We've got a government that is doing its job smoothly. That's what should lead to a 10 VIX. I'm not seeing that right now. Reality over here, market over here. Someday they'll meet up again. I don't know when. IV is extremely strange right now. Why do I pick VXX and UVXY as a hedge? Well, I don't use UVXY too much. There's nothing against it. It's just not the one I use. VXX tends to be, a lot more traded, and I like that, John. Thou shalt not abide on naturally low volatility. It should be one of the commandments, but I don't know. All right, getting back, why do I pick VXX and UVXY as a hedge? Mainly because it is one of the more usable hedges that we have out there. And understand a lot of my trading is focused on volatilities, and so a volatility-linked hedge is a good thing for me. I use VXX because it's also one of the most traded and actively traded symbols in the market. I can put on trades fairly cheap. VXX does have a problem. It erodes over time. So if I'm putting on a hedge, which basically is protecting me if VXX jumps way up suddenly, in 2 months, if VXX is starting from a lower point, the hedge is less effective. But the hedges I use actually get more effective and more responsive as time passes, and actually helps to balance that out. The other interesting thing about VXX is that the time erosion of VXX is a very, very understood and known phenomena, and the options actually price that in. So what's happening is I'm able to use a lower cost hedge in that situation to get me a pretty decent coverage. I've had people say, why don't you just use a long put on SPY? Well, it does you no good. It's no better. You can do it, and it's not a horrible hedge, but it's expensive. You're going to waste more money. If SPY goes up, it becomes less effective. You're moving SPY further and further away from the strike of your long put. Therefore, your long put is basically going towards zero, and really the chance of that trade being more effective as a hedge is decreasing, and you have to follow up with a new long put, costing you more money. Overall, and I've gone through these time and time and time again, my answer keeps coming back to VXX is about the best choice I have out of a series of not great choices. Hedging is a cost. So I want to find something that's fairly good, protects me in the very situation that I want, which is a market correction crash, and I don't want to spend much money on it. And that's what the trade, that VXX hedge trade was. So there you go. There's my rationale. Could you do the same thing on UVXY? Yeah, absolutely, you could. You might have a little bit more trouble getting in and out, but UVXY's got pretty good volume on the options. I think you'd be pretty good. By the way, the triple effect of UVXY doesn't do you a damn bit of good on that. It's already priced into the options. There's no advantage in that. So VXX works for me. You heard UVXY is going away. I hadn't heard that, Mark. Okay, good. Thanks for the heads up. Yes, Rob, play the market we have and not what we want. Exactly. We don't, you see, this is the thing, and this is also a big part of why I've got the VXX hedge on. I've traded too long, and let me warn you, for all of you who are, real excited about becoming a trader, it's a great life. You get a lot of control. You can make your life what you want it to be. More effort and more time and more intelligence you put into it, the better you're going to do. But there's this trend, After a while, we turn into grumpy old traders. And how many old traders have you met that are not grumpy old traders?
Zero.
So after a while, you get this nagging sense of the world is going to end and I've got to protect myself. You view the world that way. So that's one of the reasons I put my hedge on. I want to take that thought that's in the back of my head and I want to basically say, I've already bought insurance. I don't have to think about it. I am going to focus on the trade that's in front of me right now. And work on the data that I've got, work on what it's been doing, and make your money in the market you have. And Rob, you said it exactly. That is what we're doing. So my hedge is there because I want I want my neurotic worrying about the market to go away so I can focus on making money.
Hey, and Doug Graham said, and go bald.
And go bald. Well, yes. Yeah, well, I pulled my hair out early in my career, and it's not coming back.
You should see the old pictures of Doug. He had an afro. All right, we'll do one or two more. John, why not just trade VIX options, Doug? No price erosion to worry about.
Ding, 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 wrong. Big misunderstanding. What do you trade when you trade VIX options?
That's why I picked that one. Everybody, if you're clubbing mentally in the Bahamas right now, come back and listen to this explanation, please.
Okay. What do you trade when you trade VIX options? It's not the VIX. It is the futures of the VIX. So it is, let me see, I even have something that can do, by the way, I didn't plan this. Here we go. So if I trade a VIX option that expires in March, the underlying to that VIX option is actually the futures contract that expires in March. VIX options are some of the weirdest things out there in the market because you can take a VIX option that expires in February and a VIX option that expires in March and have two different prices as their underlyings. So right now, the VIX futures contract that expires in March, which is your actual underlying for a VIX option, is priced in at $14.12. So you're basing the pricing on the option at $14.12. That price is based on the futures market believing, oh, by the way, you want to know a group of people who are extremely nervous right now? The VIX futures traders. Even though the VIX is at $10.41, the price of a futures contract that expires in March is $14.13. It is priced 40% higher than the price of the VIX. This guy right here, the people trading this, believe we are going to have a big jump in volatility at some point soon. Are they always perfectly right? No. But they are pricing in a fairly big jump. Now, if you do a VIX option, what happens is if this implied volatility does not go up, this futures contract drops down in price. You can see now we're here about 18 days out. This one's priced at $12.55. It's going to drop right down to where VIX is. There's a massive amount of erosion in this. In fact, there's more erosion in this contract than you're going to get in the VXX, which is a blend of contracts that actually mitigates some of this problem. Not all of it, but some of it. So, VIX options can be fun to trade. They give you all kinds of they give you some of the weirdest possible trades you can do. Playing some of these irregularities between the futures contracts. But please, it is an extremely advanced trade. Spend time, learn what the VIX options really work off of. Paper trade it for a good long time because this is something that will take even very experienced traders by surprise and cause you to lose lots of money you never expected. So VIX options are not traded on the VIX. So there you go.
Great answer. All right, folks, I owe everybody a shot because I let Doug go over 9 minutes. I did because he was rolling and he was giving you some good info. So any other final questions? Oh, by the way, smart remarks for Doug. He gave you a great explanation right there, but at the bottom of that explanation is grab a full throttle slot and you will learn a hell of a lot more of this. When you go through Doug's full throttle training sessions, the 8 sessions, I guarantee you he devotes a huge chunk of it to this. So Bob Erbach, smart dude. Me? Thanks, Bob. That's awesome. All right. What? Good. All right. Hey, Doug. Everybody. Doug, why don't you say thank you,
Thanks,
good
Jeff.
night, try the veal, and I'll take it from here, my friend.
Hey, by the way, this is great. I've got a ton of my Wingman Group coaching people here. I got Jim, I've got Andrew, I've got Juan. Good to see you guys. Thanks a lot for showing up. So yeah, thank you very much. Appreciate everybody being here and being our guest this week. It's been a lot of fun. You know, and my regular people know this. I like doing this because it gets me interaction with people, and you've all been really good. I've seen a lot of really good questions, really good thoughts. That actually makes this fun for me. I would like to have people like that in my group, so if you're one of those people, come on board. I'd love to see it. The people I hate are the ones that just kind of sit, or hate, excuse me, but the people who sit back and don't actively participate. There's nothing more horrible than sitting here talking at a camera and not seeing anybody respond at all. That's terrible. You guys have been an awesome group this week, so thank you very much. Appreciate that. Lots of good opportunities. Looking forward to making some money, and I will hand it back.
All right, Doug. Thanks, man. I'll talk to you later, bro. Golf clap, everybody, to Doug Robertson. You got a lot of nice comments in there.
Hey, one quick thing. Sorry, I didn't mean to do this, but I don't want to leave these guys. I saw a couple of people ask this question. Why did the Goog trade do better than Google? Let me give you a 30-second answer on that.
Yeah.
Because luck. Okay. Now, I'm not trying to demean anybody who made money on the Goog trade. I'm happy you made money on the Goog trade. But the reality of it is that the trade strikes were based off of Goog-L. And we centered it and designed the trade to work well on Goog-L. Now, the trade ended up having a little bit more of an IB drop, and we're getting out of that right now. The reason that Goog worked is because everything was shifted quite significantly in one direction on that trade because the price of Goog was actually different, probably about 20, 25 bucks off, and it happened to land in exactly the right place. It was purely a luck thing. Don't let anybody take that as you didn't do a good job. Money in your pocket is always a good job, but that's why. Okay. Sorry, Wiz. All yours, and I will let you go.
No worries, man. Thanks. All right, folks. Golf clap for Doug. And real quick, I think we have 6 slots left. I've been in the chat box welcoming aboard folks as they get aboard so you guys can keep mental track. If you're waiting for me to get done my weekly options brief to really make a decision, wow. But there's the replay page for some of you who literally this is your first webinar. We're at the end of Full Throttle Week, folks. All the replays are on here from Monday night when people are like, who the hell's Wiz, to right now. I'm going to be trading with Wiz for the next year, and Doug, and hopefully making some serious money. That's the replay page. Okay. Weekly options. Here we go. Weekly options are just like monthly options, but they're not. Okay. I hate slides, so I'm going to go right to my trading platform. So real quick, Monday afternoon, 1 o'clock, I do my weekly options live trade brief. It's 30 minutes, folks. It's short. Why? Because we need to get moving and get a weekly options trade on. I only trade a handful of stocks in the weekly options program. Why? And it was funny. A couple years ago, some guy, I'm leaving. You only trade a couple weekly option stocks. I'm like, dude, you don't wake up on Monday and go, hey, they're talking about Tesla on CNBC. Let me try a weekly options trade on, and you're broke by Tuesday morning. I usually always trade the S&P 500 just about every week. Why? Because it's the broad market. It's impacted by politics, military stuff, the weather, you name it. I like Apple. I haven't traded Goog for a while. Also did weekly options on Facebook for a while. But you need to trade weekly options on something like the back of your hand. There's a lot of single stock risk in weekly options, meaning if I am trading Facebook, breaking news, Mark Zuckerberg is on an airplane to an island he just bought with all Facebook's money. The stock is at zero. Boom. So that's why I like trading, like the S&P 500. So Monday, I sent out this trade alert at $1.05, the bull put spread. Monday afternoon, I was in the trader roundtable, was the only trader out of 5 of them that said the market's going up this week, fellas. All 4 of you are wrong. No, and who was right? So if you got this trade, which my members did, $1,500, $1,600 profit right there in a day. My mission objective for the weekly options model portfolio is to make to average $1,000 a week in profits. What's that mean? Some weeks I get my rear end handed to me, and some weeks we print money. But if we can average $1,000 a week, somebody do the math and annualize that. That's some good living. Also set, this is the Amazon bull put spread. Sent it out Tuesday morning. Everybody, if you gave us your phone number when you opted in for these webinars, you got a text alert. This is up about $1,000. 30 contracts. I sent it out at 95 cents. It's at 60 cents. And how's the Goldman Sachs trade looking? It's down a little bit. But I did, it's flat. Down 39 bucks. Wah. This will be, I'm going to throw a dart. This will be a $35,000 trade or better when it's closed in a year and a half or 2 years. You can write down the date and time that I said that. So there's what I did this week. And then I also put on a bullish double vertical on VXX as a hedge. So let me go over to that portfolio. When I said weekly options are like monthly options, here's how I meant it. People are like, oh man, weekly options are, they're advanced or creepy. No, folks, it's just the time frame that's different. But here's how I view weekly options. If I put a trade on Monday is week 1 for me, like a monthly trade. Tuesday is week 2. Wednesdays, you see where I'm going with. So Friday is technically expiration week. Here's what I'm getting at. If I put a weekly options trade on Monday afternoon at 1 o'clock and by Tuesday morning it's down a little bit, I call them lucky strike moments. When you got to take one of those, you watch a World War II movie, a guy gets shot in the chest, medic comes up and gives him a lucky strike. Okay, good. That's some good health right there. But I call them lucky strike moments. If your strategic mindset and your commit criteria for why you got into that trade are still sound, grab a lucky strike and hang out. A lot of you tend to, when you start trading weekly options, prematurely eject, if I can say that. And then by Wednesday afternoon, the trade's back where it is and it's profitable. There have been weeks where the trade is looking great. We're at flight level. Thursday afternoon, Thursday night, China reports awful GDP, and then, the futures open up and implode on Friday. So a world of time exists in weekly options between when we put the trade on and when we get out of it. I gave you a demonstration this week that we got out of the trade in a day. There's been weekly options trades where I got out that afternoon, put a weekly options trade on a bull put spread on the S&P 500 Monday around 1. And, something happened in the I forget what it was, a couple weeks ago. Market just took off and rallied. I'm like, whoa, $1,500 in a couple hours, guys, we're out. And if you didn't get out, that was a week where Friday it was the Comey thing, the Clinton, and now we're going to look at her again. And the market imploded on that Friday. A couple members were like, Wiz, I was a pig. I wanted to keep it to Friday to squeeze another $300, $400 out of it, and Comey just gave me a $5,000 loss. The top of our slides, folks, say it all. Discipline, risk management, superior execution. So that was a hard week for some folks. So Curtis, no, I'm not holding that Amazon trade through earnings. Watch the replay, folks. I specifically say that. I'd get out of it now, folks. How many of you like $900 or $1,000? That trade was sent out to you Tuesday morning to my members, and I think I sent out to you guys eventually. That's $1,000, and it's Friday. Now, of course, that trade's got a little bit more time. We have theta, right? We have that time decay working for us. So every second that I'm squawking here, open up your pocket, and here comes a little bit of a quarter or a dollar. We get theta. We get that time decay. So I would I do not hold that trade through earnings. So that was a very good question. All right. Now, let's take a look at a weekly options trade. Let me give you, before we get tactical, come on, Wiz, let's do what we do. Quick strategic brief. Strategically, Theresa May's in the background talking at the White House. He's calling Putin Saturday. The China trade war has kind of moved to the back burner. Now it might be a Mexico snub and a Mexico trade war. So internationally, things are simmering. Things ain't really shooting yet, and hopefully not for real. So from a strategic level, I got all my intel stuff. If you can see my desk, my radar's out there, guys. I'm looking. So I'm going to focus on operational stuff here in the U.S. for next week, and then we'll put on a tactical trade. So let's start with a picture, a drawing. Let's pull out your trade plan, man. Strategic mindset. Step one. What am I? I am cautiously bullish. Again, I'm going to do a little bit of a victory lap. Predicted this, said we'd move sideways until we saw what he'd do. The guy did more in an hour in the White House than Obama did in 8 years, and we saw this. Now we're going to take a little bit of a breather again before we head up. Well, I think it's going to implode. Why? If you saw my roundtable on Monday, and I respect all the guys. I mean, come on, it could have been a coin flip. Actually, it couldn't have been, because I gave you the reasons why I knew the market was going to go up this week. I don't flip coins, but I'm being nice to those guys because I've had my share of bad calls too. We're going to take a little bit of a break. So wait, Wiz, you said you're cautiously bullish. I'm talking front months, January, February, March-ish, bullish. But I can be tactically a little bit bearish. I think we're probably going to level off a little bit, especially with these weekends, man. The market tends to sell off into the close on Fridays. Why? The market doesn't want to be long going into the weekend. Hell, some of these weekends, there's a terrorist attack, or this happens or that happens. There's a tweet, there's a march, and Monday, you know, at least up at Peak 6 Investments, a lot of guys got skinny going into the weekend. I am flat, man. I am not going into these weekends nowadays with any sort of major positions on. So just know that. I could be completely wrong. Monday, Trump could be doing even more spectacular stuff, and you know, the market takes off next week. Definitely a risk. But after doing this for about 26 years and flying the Hornet with 3,000 hours, you get a feeling for the jet, you get a feeling for the market. Little bit over our ski tips with the rally this week. Very excited to see people confirm. Very excited to, you know, Steve Mnuchin from Goldman Sachs is going to kill Frankendodd. There was some Janet Yellen had a couple nice comments. So we're feeling good, but we need another leg up. He did action this week. I just don't know if more of his action next week is enough. We're still in the heat of earnings seasons. We have tech earnings really coming up hot and heavy. So, you know, we'll see. Do you only recommend? No, folks. Sometimes I put 2 trades on Monday. Sometimes I put 0. Weeks this year where I didn't do a weekly options trade. Why? It was absolutely nuts. I forget what. Well, it was the Brexit. I put volatility trades on. I put VXX trades, but I didn't put like an S or no, whatever week it was. What's that 1980s war game movie? Sometimes the only winning move is not to trade. So we, it's incredible. So, KG with a political thing. Yes, Trump is moving political climate in Washington, which is very true. Yeah, KG, don't want to. Let's ditch the politics because I got to get to a trade. But I might not do a trade. Why? Well, let's take a look at one. So the target that I'm shooting at is SPX. Step 2, target SPX. I don't trade SPY. I explained to you guys earlier in the week. There's different tax treatment between trading SPY and SPX. You guys can Google it. I'm not a tax attorney. I'm not your accountant. I'm not going to give you advice on that. You know, just figure it out. I just saved you 30 or 40% right there. Don't trade SPY, trade SPX. If you trade the Russell, if it's got an index, don't trade the ETF, guys. I get kind emails all the time like, Wiz, I researched that. You literally are you're going to save me grands. It's the annual membership, Wiz. Thanks for saving that for me. So I think we're going to roll over a little bit here. So the tactic I'd look at is a bear call spread. A bear call spread, meaning I don't think the S&P is going to be going up here. All right, Wiz, I know your call sign is Wiz. It's not Nostradamus. How the hell do you know what the right side of the chart looks like? I don't. But here's what's cool about the options market, folks. I can tell you at a cocktail party tonight, I can sit there and go, hey, I'll tell you what I think the range is going to be. And I do that by looking at what is called the at-the-money straddle. And what I'm going to show you I'm going to do it quick, because I want you to join. I'm not going to spend, because I got to get out of here too. Let me pull up. When you look at SPX, they have like Wednesday expirations, Friday. There's a lot of expirations here. So next Friday would be February 3rd. So let me pull up February 3rd. See how many expirations there are between now. There's one today. There's Monday. There's Wednesday. So, or is it? God, it's almost daily. So I'm going out to February 3rd. And here's what the at the money straddle. And of course, Murphy was an aviator and a trader. There is no 22.93 strike. That is literally between 22.90 and 22.95. Thanks, God. You do have a sense of humor today. So the math is going to be slightly off, because if it was at 22.90 or 22.95, the math would be perfect. It's not. Let me pick the technically, all right, the 22.95. If I'm losing you, don't worry. Watch the replay or grab your membership. And Annie's Skyping me that another one just went. All right, new spread, straddle. Now, the tactic I'm doing, folks, is a bear call spread, but I'm using the at-the-money straddle for something very cool. So you see this right here? The options market is pricing in a move between $18.35. Watch. Let me click Mr. Mid-Market. Let me click Analyze. And you ready for this? I'm seeing a lot of light bulbs turn on like, holy crap, I've never seen this before. Look at this, the break even. The math is off a little bit, folks. The at-the-money straddle, if we were literally at 22.95 right now, it would be around a 60% probability. That's pretty good. Certainly better than half. The options market, and if you're an iron condor trader, this is a great place to start. The options market is pricing in a move between 23.13 and 22.76. You see that green part of the triangle? That's the prices right now in Chicago, London, New York. All the options market makers and all the activity in SPX is pricing in that range. Does everybody? Awesome. Never heard. I'm glad you never heard this. That is awesome. Absolutely, you're welcome. And man, imagine when you join the knowledge you're going to get. So why did I do this? Well, and first of all, the SPX bull put spread I sent out on Monday in the text alert, what did I say? I said, hey, I'm looking to leg into an iron condor, because I thought we'd go up, but maybe not super up like we did. When I say looking to leg into an iron condor on the text, it means I might, but since we popped, I didn't. So if I was looking at maybe some upside, I would have looked at this strike. So let's take a look at the 23.10, 23.15 out the next Friday. Create spread, and again, optionshouse.com/TGO if you want to open a free paper trading account there and fly formation with me on this platform. 23.10, February 3rd, add legs. I'm going to do 15 contracts. If you're sitting there going, why 15 contracts? I'm going to answer that in about 1 minute. So I might have to go to 23. Let me price this one, 23.05, 23.10. Of course, I was doing this as Doug was talking and the market moved on me. Let me start with the more aggressive trade I'd be looking at. And then I'm going to really blow your mind at the end of this when I tell you I'm not doing this. So let me just, I want to demonstrate to you. We don't do weekly options trades on Fridays. That's why we do them on Mondays. Phyllis, thank you, Phyllis. To help your users, tell them to look section 1256 of the tax code at irs.gov. Thank you, Phyllis. All right, folks, so I'm going to look to sell 15 of the Feb 3rd 2305 calls. That's me saying, hey, I don't think the S&P 500 is going to be above 2305 by next Friday. All right, Nostradamus, what if you're wrong? Trump builds the wall himself on Tuesday and the market rallies through the roof. Well, it's going to suck for me, but I'm hedged. I'm buying 15 of the 2310 calls. If it does rip up, I'm hedged to the upside, okay? It's about $1.20, $1.25 credit. I'm going to click create order, and I always go mid-market, man. Never come in and make market makers any richer by coming bid at the ask. Now, if this is your first webinar with me, visualize me turning into a Catholic nun right now. I know that's not pretty, not a pretty visual, but Sister Mary Matthew and I got a ruler. I'm going to click this analyze button, and you're only going to look at one place, and if you don't, crack your own knuckles. You ready? 3, 2, 1, look at the sad face. Right now. Max potential loss. If I didn't say to look there first when I clicked analyze, well, my members wouldn't, but everybody, the 800 other non-members in here would have looked at the happy face first. Admit it, folks. I used to do that until I used my combat training and became a guy. You always look at max risk first. If you're not okay with potentially losing this, we wake up tomorrow and Jesus came back to life. Okay, I know he's still alive. I said that one time, like, hey, if Jesus comes back to life in the market rally, somebody's like, that's rude. He is alive. I'm like, oh, my apologies. It's an analogy. It's a joke. If we wake up Tuesday morning and it's a rip your face off rally, a missile we just couldn't have seen, are you okay with losing that? Hell no, Wiz. Then either don't do the trade or I'm doing 15 contracts. If you're sitting there going, Wiz, I got a smaller account. I got a 5-10 grand account. Maybe you do 3 contracts. Maybe you do 1. You have to come up with your own SOP, standard operating procedure that says, I do not want to risk more than blank on any one trade. For the Wiz fighter, I don't want to risk more than 5% of my model portfolio on any one trade. Why, Wiz? Why not? After a quarter of a century of doing this, I'm a 5% guy. You might be 10, you might be 5, you might be 100, and then you'd be crazy. Of course, I don't want to lose $5,700, but if I wake up Tuesday, like I said, an unseen missile hits us, I'm still alive. Now, if I'm okay with this, now let's go vertical and look at Mr. Happy Face. $1,800 potentially by next Friday. Who wouldn't want to make $1,800 by next Friday? Duh. Using at the money volatility, there's a 62% probability of that occurring, and then the break even is down here that with a 64% probability, up all the way up there at 2306. So if you think we kind of peaked out here and it was a great first week of Trump, and there might be a little bit of a hangover next week as we wait to see who's next and tech earnings come out, this might be a good trade. This, as I said, is the little bit aggressive trade. But so let me grab a screenshot so I can at least put this in the email for you guys, the replay email. This is what we do, folks. Remember, I'll send out a text alert and then an email alert, and then you get the recording. So now I'll show you the conservative trade, and then I'm going to tell you why I'm doing neither of them. And then I have a special announcement. Okay. Why, as I'm grabbing all these screenshots and stuff, I'll talk to you. Why am I not going to put these trades on? And current members don't answer. I know you guys know the answer. Why would I, if the world doesn't, well, I'm answering the question. Why am I not going to do either of these trades? Somebody? Bueller? Good answer so far. I can see him out of the corner of my eye. Look, I can multitask. SPX 127 metrics. That's exactly right. It's a couple really good answers. It's Friday. A lot of people say, hey, Wiz, there's time decay over the weekend. Folks, exactly. Tony, Tim, Rita, Carol, Jackie. Folks, anything can happen. Exactly, Mike, over the weekend. So while this looks great, Wiz, you had me at hello. I believe your strategic mindset, your commit criteria, everything looks good. And Sunday, some ISIS dude in another dump truck plows into people and the futures are down on Monday. I'd rather wait until Monday to do this, but I wanted to at least demonstrate some weekly option stuff. If you're not listening to me, you're like, I don't care. I don't think anything's going to happen over the weekend. This is the more conservative trade, the 2310, 2315. But look, it's 90 cents. I don't like under $1 on my weekly options trades here. Let me click Analyze. Sister Mary, Matthew, crack your knuckles. That's a little north of risk for me. It's $6,200. That's above my SOP. I can break it. I'm the skipper. Most likely wouldn't. But Wiz, I'm okay with that because look at Mr. Max Profit. $1,400 in a week. This time next week, I have a 70% probability of making $1,400. Yeah. Using current at the money volatility. Why did I say current? Because this isn't Tuesday volatility. If Tuesday something does happen, unseen missile flies up at this trade, the at the money volatility is going to be a lot higher. Okay? So, quick demonstration of how I do weekly options. It's a 30-minute webinar on Monday, folks. It's quick. It's weekly options. I put 1 to 2 trades on. We've had a couple great Apple weekly options trades lately. Great S&P 500 trades. Every once in a while, though, folks, hey, man, I will tell you about my losing trades. You know, an out-of-the-blue missile, Fed lieutenant comes out of the blue and says something, and oh, those are going to happen, man. We do lose some battles, but in the weekly options program, man, we win the war more often than not. So this would be the more conservative trade. The reason I took the screenshots is I'm going to look at these exact trades on Monday. Hopefully, God willing, nothing happens over the weekend. And then Monday at 1 o'clock, all my new members, wait, I think I have timing research. Whatever, we'll send out an email. I think I might have a conflict. But regardless, I will send out a weekly options trade on Monday. So let's wait until Monday. Exactly, Ed, my alphabet. You were around. I had that Google Iron Condor on. Put it on at 1 o'clock. Got on the treadmill at 4:07 after the market closed. Breaking news on CNBC, Google announces its name change to Alphabet. Stocks up 5% after hours. There goes my Iron Condor at max loss. I laughed at that. You laughed at losing $5,000? Not necessarily, but I know that does not happen more than we win. Those are going to happen, folks. They leave a mark. They're painful, but after 26 years of this, I actually laugh at that. I'm like, are you kidding me? First of all, it's stupid. It's like if FedEx changed its name to, Steve's Flying Service, we'd still call it FedEx. Everybody still calls it Google. Nobody calls it Alphabet. That was dumb, and you can tell I'm still bitter. And Alex, that's another good point. The Fed meeting is next week. So let me pull this up. Always have this calendar up, Forex Factory. You have to, when you're doing weekly options, I should have done this as part of my trade plan. I got a little off script. Go out to next week. What are the potential events next week that could reach out and touch us? Janet comes out to the microphone and says, we're raising interest rates again. The market will probably pull back a little bit. Write this down. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. Okay, and somebody just got a PayPal annual slot. Didn't see the name. So that means we probably have about 5 left. So, and Annie's Skyping me that she's still on the phone with somebody. Okay, so myfxbook.com is very cool too. Jobs report next Friday. I don't think the the jobs report is super nuts. That it used to be before. Janet said we're on a climb schedule this year. We're going to start raising interest rates. Back when it was Bernanke, remember it was Bizarro market under Bernanke. He was pumping $85 billion a month into this market. So good news was good news. Bad news was good news. And awful news was great news. All right, what the hell does that mean? Remember when we'd have an awful jobs report under Bernanke? The market would rally. Why? Because traders would go, Ben's not going anywhere, man. He's going to keep pumping $85 billion a month in liquidity into this market. You can't, we're not strong enough. I work out every day. I'm not strong enough, wasn't strong enough to fight $85 billion a month in quantitative easing. Okay? So yeah, a Fed meeting next week could reach out and touch us as well. Okay? Graham, after 4 years with TGO, I know who wins in the long term. You have losses, but you win much more. That's exactly right, Graham. This is going to shock a lot of you. You ready for this metric? And Doug is probably in the ballpark. Professional traders, most people are shocked when you hear this. Retail traders. Most professional traders, their mission objective is to win 60% of the time. Now, for every 922 people, retail traders in here that just went, I want to win 100% of the time. That's why you're here. You can't. I'm going to break you of that. I have to win on every trade. Then you're swinging for the fences, man. You might hit one out of the park. You're going to strike out more often. My personal mission objective is I'm around a 74%er right now. Love it. My professional trader objective is to win about 70% of the time. Remember, even if you're shooting for 51% of the time winning trades, over time you're making money. Does everybody get that? So for all the 100%ers in the room who are like, no, I need to win on every trade, you're gonna end up with that mentality. You're gonna fly in the side of a mountain period. Okay, here's what I want to do. Special announcement. Since Annie said we have 5 and the phone's still ringing though. Here's what I'm going to do. This is for the next handful of people. If you go to, what is it, Get FT? Let me go to Get FT. If by now I didn't push you over the edge with, okay, weekly options, pretty cool. I don't know what will. Maybe you need to do it for a couple months. Here's what I'm going to do right now. Underneath the annual subscription buttons, I will allow monthly a couple, however many we have, slots. So let me go through these again. The defensive track is everything we did this week except no weekly options. Instead of weekly options, you do accelerated retirement. Okay? The offensive track is everything, ditch accelerated retirement, and you get weekly options. And finally, the best value obviously is just about everything we do here at TGO is the max afterburner slot, okay? So here's what I'm going to do. Max afterburner, $295 a month, $245 for offensive or $195 for defensive. Go here now, ready, go. Now, if you do the math, folks, you're paying a hell of a lot more than an annual subscription. So all the folks who got their annuals are like, well, that's good. I got a better deal. Of course you do. Obviously, I'm not the United Way of Wiz, folks. I'm a business. So every time we charge, monthly, credit card fees, transaction, all that crap, that's why the monthly ones are higher. Here's what happens. After about a month or two, you call Annie and go, hey, I want to upgrade to an annual. So for the folks who are still a little, okay, the Doug and Wiz show was great this week. Maybe they were just on this week. Let me try them for a month. There you go. We're gonna give you a try. Sailor Rob, Wiz, I'm a monthly since October. Small options account, but with the success already, we'll go annual in a few months. Thanks, you and Doug are the best. Thank you, Sailor Rob. I appreciate that. So we will open up some monthly slots since we got 45 of our annuals sold, and I guarantee you the reason nobody's asking questions right now is because most of you are on this who waited for the weekly options brief. You can grab a monthly slot. Kai, I can't do that. I will take 3 months of the max burner. Please advise. Kai, folks, if you want to, we do have quarterly subscriptions. The reason the quarterly subscriptions are not on here, the confused mind says no. Okay, well, there's an annual, there's a monthly. If you want a quarterly subscription, give Annie a call. I think she got a couple calls during the week that I allowed to do a quarterly. So here's the big announcement that I'm making. For the remaining slots, you can either do a quarterly or a monthly. Annie's been on the phone all morning, so if you don't get through, leave her a voicemail. But folks, I don't know why. If you want a monthly slot, this is the internet, man. Welcome to 1994. Just go to this page and grab it. It really makes no sense to tie up Annie's time saying, hey, can you get me, send me the link. Okay, Annie's there for if you have any questions or anything like that, or a quarterly subscription. Okay. Andrea, missed a weekly trade. Can you repeat? I will, but I'm also not doing it. So I will show you what I am going to look at on Monday. Where the hell to go? SPX. Here's the overall. It's a bear call spread. I gave you my strategic mindset, the target, the commit criteria. Here's the tactic, the trade execute. Oh, here's what I didn't cover. The eject. If I do wake up Tuesday morning and the futures are down, and this trade, remember, we want this trade to go down in value. We want that full $1.30 in our pocket by next Friday, whenever. We want that to go to zero, down. Remember, when you sell something, you're the car dealer. Guy pulls out with his midlife crisis in that Ferrari, it depreciates. If he does a U-turn because his significant other said, take it back. Hey, Wiz, can you buy this $250,000 Ferrari back? Yeah, for $200. Sorry, dude. So if we wake up Tuesday, Wednesday, Thursday, and this trades up, I double the credit that I took in. 260 in this case would be my eject point. The jet's on fire. There's smoke in the cockpit. My wingman screaming, Wiz, eject. Get out of the trade, man. But there's a point inside the eject. If it's 260, maybe about 220, 210. I take off my oxygen mask and I start scratching my chin and going, why is the S&P 500 climbing here, and why am I losing a little bit of money on this trade? So that's what I call the adjust point. And again, if you're like, whoa, slow down, Wiz, watch the replay or sign up, because I cover all of this in the weekly options brief. Here's where I'd potentially adjust the trade. Here's how I would adjust it. I could roll it up a couple strikes. I could roll it out to the following Friday, or I could do both. Roll it up a couple strikes and out. All right, Wiz, well, that's 3 things you could do. Which one are you going to do? I don't know, man. Again, I'm Wiz. I'm not Nostradamus. If I knew why the SPX was going up, I'd tell you if I'm going to roll it up, out, or up and out, okay? So again, I know that was a little quick, but it's supposed to be. It's weekly options, and we need to get airborne here. Yep, I'll get you the link, or the phone number 754-300-1084, folks. The only reason to call Annie right now would be to get a quarterly subscription. The monthly subscriptions membership is right on here underneath the annuals. Just click on that little hyperlink right there. Okay. All right. Yes, I'll give you the link right here. Paste. Paul, that was my first lesson I learned on my own trading with you. Oh, good. Awesome, man. Is there a way I can just join Doug's trade, not yours? Your trades are good, and yearly price of $29.95 is good. However, since you use foul language at times, I do not like to hear the way you talk. KG, no offense taken. If you just want to maybe subscribe to Doug's services, definitely give Annie a call. I am who I am, and if you were offended by a random use of some profane language, I apologize. I think you were the commander that sent me an email. Maybe that's why I didn't get selected for commander. But yes, call Annie, and she can get you into Just Doug's services. So not going to be changing who I am at 48 years old. So, but welcome aboard, KG. Fish, get over it. Hey, teach his own, folks. KG, welcome aboard our squadron, sir. Mimi, have a small account and don't need the retirement part. Was hoping the weekly would build my account much faster. So yeah, Mimi, absolutely. Okay. Time to go to the O Club. Exactly, Sailor Rob. I'm buying. All right, guys. I like the salty sailor pilot. Thanks, Alex. Again, teach his own. I think KG sent me an email the other day, and he forwarded it to me about, and he's got a point, folks. You spend time on an aircraft carrier, around fighter squadrons, and in the Chicago options trading pits. And my family grew up in South Philly, and I grew up in South Jersey. I'm not Harvard educated, but you're right. My mom would most likely, if she heard me today, probably smack me right in front of all 900 of you. All right, folks, I got to get going, man. We had a hell of a week. First of all, did everybody have fun? Did you have fun? Did you learn something? Did you have fun? We probably aren't doing another full throttle for months, folks. So you need to. Good. Thanks, guys. Hell of a week. Awesome. Awesome. Awesome, guys. Thank you. You're absolutely welcome. Yours refined as number 2 diesel. Thank you, Bob. Jay, I remember you, Jay. Welcome back. Amen always. Great week. Bill, stress levels vary, so does language. Extremely well done. Has said worse many times. All is well. Thank you, Bill. Yes, the best ever. Thank you, Frank. See you soon. Great fun. I joined the max. All right, guys. Let me wrap up real quick. It was a blast. We literally opened up the door to our squadron. Doug and I threw open the doors, and you show what we do. We did nothing special this week, to be honest with you. If you thought it was special, that makes me feel good. But this was a great week. Best I've seen and heard. Thank you, Craig. Craig Saunders. Karen, Sticks and Stones. All right, guys. Matthew, I'll be back for your next full throttle. Have to move some money around. Matthew, we'll save the slot for you. Mike, always great. I enjoy even your salty language because it always serves to make the point stronger. Got it, Mike. Shrek, my buddy from Top Gun. I pick and choose from full throttle, highly recommended. I started with just weekly options. Now I am going into AR, accelerated retirement, as well as the PLTB. Semper Fi, Shrek. All right, folks, I had a blast. I'm going to get the replay out. I'm going to get the trade out. I'm not going to place that SPX trade, guys. If you think that looks like a great trade, you have to fly and fight your own airplane as the pilot in command. I'm not placing, I do not do weekly trades over the weekend. You know why? That rule's written in blood. Shrek can attest to this. When the F-18 left the the McDonnell Douglas flight line in 1983, the emergency procedure section was probably about 2 pages. A bunch of engineers said, hey, here's some things that might happen. The emergency procedure section on the Hornet now is about 90 pages. You know why? Guys did stupid things, or the jet did crazy things. So I learned, you can stand on my shoulders, you can stand on Doug's shoulders and learn from us. So don't do a weekly options trade over the weekend. Sign up and get your weekly options trade as a member on Monday. Awesome week. Awesome. See you next week. Welcome aboard. Thank you. I've subscribed to your Max. Really excited. Tamara. Tomato. Welcome aboard, Tamara. Karen, thanks. We'll watch replays. Missed much due to family illness. Karen, sorry to hear that. Thanks for the recordings and have a good weekend. You bet. Folks, when this comes down, this page, the replay page, we're full, okay? We'll take a couple more monthly slots, but once the replay page is down, maybe I'll leave it up until Sunday. If the buy buttons are down, you see on the everybody's buying here. You see the blue buttons here. You can click on here and grab your full throttle slot. So after you watch one of these videos, and you go, wow, that was pretty good. If the buy buttons are down, don't call Annie on Monday and say, hey, I want to grab a slot. It's because we're full. You saw throughout the week, folks, I showed you that nearly 4,000 people registered. Doug and I, as instructors, it makes our skin crawl that we can't answer everybody's questions in these free sessions. The member sessions, next week, you're going to be in GoTo training. You're going to be able to see each other's chat. But we actually on Tuesday had to, I know some of you couldn't get in the room. We had to call GoToWebinar and up our room to 1,000 people, and that was a first. So I'm very fired up, man. 2017 is going to be great. We had a blast in 2016, but we're going to Craig, you're not going to change. I saw Bobby Clark play for the Broad Street Bullies. You got it, man. Best part of my week is all the live classes, sit reps, and recordings. Thanks, Wiz, Doug, and TGO Fish. Awesome. As I'm a new member, are the replay pages going to remain available? Mark, they're going to be on the member pages. Alex, you're so easy to listen to. Thank you. You're welcome. Graham, weekends. Russia invades countries. China builds another island. That's what you do. That's why you don't hold over the weekend. You got it. Wait, somebody asked me. Oh, and for all the folks that are signing up right now, I know a lot of people were like, that's the special announcement I needed to hear, because I know a lot of you were emailing support throughout the week with Annie going, hey, do you have, can we break this up into some payments? As soon as you sign up right now, folks, underneath the member content, there is a getting started video. Watch it. It's 22 minutes of me driving you around the site and welcoming you aboard and showing you the ready room and other stuff. Remember, after you sign up, also to send Annie your cell phone number. Just because you gave it to us to opt in for the full week of free stuff, that system doesn't talk to that system. All new members, make sure Annie has your cell phone, and yes, we send international texts. Hell, Ed, Graham's from Australia. I get my text the same time as Graham does. Go figure. Okay, and let's take a look at, yeah. All right, well, a full throttle annual offensive package. John McCarney, Fort Washington, Pennsylvania. Welcome aboard. All right, guys, literally I have to go. I went 15 minutes past the initial I have to go. You bet, Greg. I am looking forward to a prosperous 2017. Jackie, Skip's working with you on it, man. We can't do any more, Jackie. He is the best techie in the business. Everything's working for about 990 other people, Jackie. I know it's a little frustrating for you. I think it's a text issue, but our text system's a radio station, folks. If we're broadcasting it and you're not getting it, it's on your end. And I know that sucks as an answer, but it's the truth. If I'm getting them, they're our text company doesn't have like, oh, Matthew Buckley, CEO, make sure he gets the text. I'm in the system as a customer, folks. I want to go through what you go through. I eat my own dog food, so it's working for me. Arnie, don't hesitate to join TGO if you have a small trading account. I joined 6 months ago, up 50%, trade only about 10% of Wiz's contracts. This really works. Arnie, I'm grabbing that as a screenshot, my friend. Thank you for that. Okay. And that's the phone in the background. So, all right, guys, again, had a blast. Thanks for coming. Even if you don't join and you know, I really hope you took something away from it, because I'm very passionate about what I do, and hopefully that comes across, man. Trading is a form of combat, and the whiz fighter, there's Arnie's quote, and the whiz fighter doesn't like to lose. All right, so have a great rest of your weekend. Happy hunting. Make sure you hedge, folks. This thing, I'm cautiously bullish. You have to have an ejection seat in this market, man. Something's going to happen. Okay, I'm like Eeyore, right? Winnie the Pooh. It's going to rain or this or that, and then when it's sunny, I'm pleasantly surprised. With these trades, I'm like, oh man, Max lost this, that. Hey, I made $2,000 this week. That's my job. Let me be the let me be the Eeyore. Okay, Bob, what was the sign up page again? You got it. It's really easy to remember. It is go.topgunoptions.com/FT full throttle -now. Thanks, Ed. I am going to have a good weekend, man. I need to. This was a busy week for me, so I'm going to decompress a little bit. Curtis, if you're having a text problem, contact your wireless provider. I had to get on Verizon to get it resolved. Curtis, that's exactly right. It comes from a 5-digit number, and sometimes they think that's spam. So you got to go, this number is safe. All right, guys, that's good. Bob, I gave you the sign-up page. It's right there. Go.topgunoptions.com/FT-now. When the replay page comes down, we are full, and we're not messing around. You'll see next week when you can see each other's chats that during the last full throttle, one of our new members is like, wow, Wiz, now I know why you guys limit the size here. Okay, Karen, that's it. Your passion, it's infectious. That's great. Awesome. And the phone's ringing off the hook. All right, guys, I got to go. That's it. God bless. Thanks for coming. Even if you don't grab a slot, I wish you well in your trading career, or maybe you can come back in a couple months or whenever we do our next full throttle, and we're going to get airborne with all our new members on Monday. Okay, God bless. Happy hunting. Make sure you hedge, and welcome aboard to everybody here at Top Gun Options. We'll see you.